Tesla stock tumbles as Q1 deliveries fall 8.5% from a year earlier. This is pretty bad because the EV market overall is still growing, albeit slower than it was in the past, but people are still buying EVs. So to have the face of EVs, Tesla, declining in sales is a pretty big deal and also looks really bad to the shareholders. So let's talk about what happened and the big strategy shift that Tesla's going through right now to try and win back some of that investor confidence. And first, we have to discuss what happened. Tesla sold just under 387,000 vehicles in the first quarter, down 20% from the prior quarter and 8.5% from the previous year. It was the company's first year-over-year sales drop since the early days of COVID-19 pandemic in early 2020. The final count falls short of Wall Street's expectations for 457,000 deliveries, according to an average based on 11 analysts' forecasts provided by FactSet. Although analysts had been expecting a poor first quarter from the company, the figures were, quote, an unmitigated disaster that is hard to explain away, according to a note Tuesday from Wedbush analysts Dave Ives. And as you can probably imagine, Tesla had a pretty significant drop in the stocks right after this was announced. As you can see, here's the second when it was announced, and there was a drop of about 5%. But as you can see from this chart, Tesla's been having a pretty rough quarter so far, as they've dropped 30% year to date, with this slight increase here at the very end, which has to do with their new strategy shift, and we'll cover that at the end of the video. When something bad happens to a company, like sales dropping, or in this case, deliveries going down significantly, there's always kind of two reasons given. The first reason is given by the company and is what the company wants you to believe happened, and the second reason is usually what actually happened. In this case, what Tesla says happened was the company blamed the decline in volume in part on factory shutdowns as a result of the Red Sea conflict and an arson attack in Tesla's Berlin Gigafactory. Now, going off of the two things that Tesla mentioned in their reasons that their sales had gone down, they mentioned an arson attack on Tesla's Berlin Gigafactory and the Red Sea conflict. It's possible that the sales were impacted a little bit, but the arson attack on the Tesla Gigafactory happened on March 5th. As you can see here, Tesla shares slipped 4.5% after suspected arson attack halts production at Berlin Gigafactory. But this release was on March 5th, so most of the quarter had already happened by the time this was released. And in addition to that, this would not explain the significant year-over-year decline that we've seen. It would only explain the decline from last quarter to this quarter. And as for the Red Sea crisis, I can't say much about that because I'm not an expert in anything that goes on over there. All I know is that the Middle East makes up a very, very small percentage of the EV market. So I would be very surprised if that crisis was in any way affecting Tesla's production. So now that we've addressed the reasons that Tesla says this is happening, which I honestly don't believe, we can go over the reasons that I believe this is actually happening. And there are three of them. The first one is that there's just not enough infrastructure. The second reason is growing competition. And the third reason is Elon Musk himself as a controversial figure. For the first reason, we have infrastructure. And basically, if you don't own a home, you have nowhere to charge your vehicle. The only option you have is to spend 2 or 3 hours a week charging up your vehicle at charging stations. And that's a lot of time you're giving away. And I think that's encompassed really well by this article from Gallup that says EV ownership ticks up, but fewer non-owners want to buy one. 7% of Americans, up from 4% a year ago, report that they own an electric vehicle. That increase is matched by an equal decline in the percentage of people saying they are seriously considering buying one, from 12% down to 9%. Meanwhile, fewer Americans, 35% down from 43% in 2023, say they might consider buying an EV in the future. Thus, even as some people have moved ahead with their intent to buy EVs in the past year, public demand for the cars has contracted. And without better infrastructure, basically the number of people that are willing to purchase Teslas is not going to continue to go up because there's no reasonable way that they can charge them without owning a home. Many of the people that are able or willing to buy an EV have already done so, and many of the ones that maybe would want to don't own homes or don't have a practical way to charge it consistently. The second reason is competition. So the US and China are two of Tesla's largest markets, and both of those markets have companies that are better equipped to churn out more high quality EVs than Tesla themselves. In the US, you have companies like Ford, Chevrolet, GMC, and so on. But in China, you have companies like this, BYD, which is an extremely popular Chinese electric car manufacturer, and they're extremely popular for one very specific reason. It's the price. BYD launched a price war on ICE vehicles last month with the new Quinn Plus EV and the PHEV models, starting at just $15,200. The new EV officially opened up a new era of electricity that is cheaper than oil. They make really, really affordable cars, and Tesla isn't able to compete with that. In fact, they're so unable to compete with that they're not even trying anymore. Exclusive, Tesla scraps low-cost car plans amid fierce Chinese EV competition. Tesla has canceled the long-promised inexpensive car that investors have been counting on to drive its growth into a mass-market automaker, according to 3 sources familiar with the matter and company messages seen by Reuters. So there's more competition than ever in a market that is not growing as much as these car companies had anticipated that it would. And Tesla specifically is suffering because it's unable to keep up with companies that are able to offer more lower-priced electronic vehicles. Now, the third reason is Elon Musk himself. And before you get upset, I'm not making any kind of value judgments about Elon Musk. I'm just talking about how the image he's cultivated for himself as kind of a controversial and very political figure has negatively impacted his company Tesla. If you scroll through his Twitter, you can see a large percentage of the tweets he makes are political, and this upsets a lot of people. When you make any kind of political statements, then you basically automatically alienate half the population that is on the other side of whatever political spectrum you are for or against. And to be clear, this is his Twitter account. He can do what he wants, including making as many political statements as he would like, and that is fine, and I will forever defend his right to do that. But the issue is that he is synonymous with the Tesla brand and company. So as he makes these political statements, he's alienating potential customers who might not agree with his ideologies and as a result buy from another company. And Elon Musk has been especially critical of Democrats and the Democratic Party and the Democratic policies, which is, again, fine to do, except for the fact that Democrats are more likely to own electronic vehicles than any other political party. As you can see from this survey, Democrats make up 51, almost 52% of EV owners. Republicans make up about 14%, independents about 12.5%, and people who aren't interested in politics around 10%. Again, there's absolutely nothing wrong with him using his Twitter to be political. That's just fine. That's freedom of speech. He's allowed to do that. However, the issue is when you are critical of the party that is most likely to purchase your product, you're going to lose out on customers. And that's what we're seeing happen here. Now, as I mentioned on Friday, Tesla saw this pretty significant jump in stock price, up about 5% in just one trading day, and that's because Elon Musk has shifted the strategy of Tesla. Basically, he's seeing all the same data we are, and as a result has pivoted to this announcement. Elon Musk says Tesla will unveil its robotaxi on August 8th. Shares pop. This makes sense as a pivot because Tesla, 1, needs a big win, and 2, they have some of the best self-driving technology in the world right now. Imagine them building these self-driving taxis and then taking on companies like Uber and Lyft because they're able to offer much lower prices due to the fact that they won't have to pay drivers. That would be a huge cash cow opportunity, so I wouldn't be surprised if Tesla moves away from offering products and starts offering services. The 2 big services they could offer are 1, really inexpensive and affordable robot taxis that don't need a driver, which keeps the costs down, and 2, they could be renting out their large Tesla charging network to other companies that need charging stations. Ford and Chevy and Honda and Toyota, all these other companies that are making electronic vehicles don't have charging networks that are anywhere near as well built out as Tesla's is. And as a result, they're probably very willing to pay to rent Tesla charging stations. Buying an EV from Tesla just makes Tesla money once, but putting together a robot taxi empire that people pay to use on a consistent basis and then renting out charging stations makes Tesla money over and over again every time someone uses the product. So it makes sense this is the direction that Elon Musk would steer the company. But whatever happens, I promise to keep you in the loop. Thanks for watching.